Thank you for welcoming us, but I think it should be us welcoming you to this gathering. This is become our culture. We normally meet you to present the status of the economy. We don't go into the entire economy, as we said. Normally, we focus on what is linked to our mandate as the central bank. Presentation, as you see here, is we always start with the global environment. We put what we do or what happens in our economy in the context of the global environment. And global environment, we touch on the regional environment as well. That's Sub-Saharan Africa and East Africa in particular. Then we look at our national economy and then zero down to what we do as the central bank, the monetary policy stance, and then we look at the financial sector, how it's performing, and we normally end by showing you what we see as the outlook, what will happen going forward. So this slide summarizes the global context. When you look at the blue graph, the linear graph blue, we tried to go back to 2007 in fact back to beginning of 2000s and show what has been happening in the economies in general. But the interesting part is 2008, where we had the global financial crisis. You see the global economy in general reduced from above 4% to around 3%. Slight improvement around the turn of the decade, 11, 12, but this has persisted. The malaise within the global economy has persisted, and that will have an impact. We really wanted to show this to show that what we experienced in 2016 and in 2015, the crash in commodity prices and all that, is linked to this long poor performance or long-term poor performance across the globe, and that has affected the global demand, therefore impacted on the prices, on the global prices. And the black graph there is the developed world. They really had the big impact in pulling down the global economic performance. But as you see, it started improving from the turn of the decade, as I said, but then China kicked in. China's performance started reducing, and that's why the global performance in general continued to be mild. And as you see the green line with the emerging markets, that's where you see China's impact in the downward curve, the green curve. That has had now a big impact on Africa, the red line, that is Sub-Saharan Africa. As I said, the slow or the low global demand pushing the commodity prices, that has had a big impact on the performance of the African economies, crashing to 1.6, which is our lowest for quite a long period of time. As you can see, since 2000, we've never gone below 3%. So last year was really a bad year for Africa, but I'll come back to that to give further details on Sub-Saharan Africa itself. The good news is, as you see the dotted lines, across the different parts of the world, we see a positive trend, sort of a turn in the curves. So we expect 2017 to be slightly better, to be much better than what we experienced in 2016. So from the global economy, expected to be growing by 3.4%, Africa recovering to 2.8%, and the emerging markets recovering 4.5%. So this has an impact on our economy in general, as I will come back to. This is as I said, the Sub-Saharan Africa breakdown. We tried to isolate the three countries on the left. At least on my left, I hope it's on your left as well on your screens, where you see Angola, Nigeria, and South Africa. These countries performed relatively really bad in 2016 with as you can see, focusing on 2016 anyway, years they were doing slightly well. But in 2016, Nigeria is growing by negative 1.5, South Africa growing by 0.3, Angola 0. And these three countries combined make 60% of the Sub-Saharan Africa economy. So 60% of the Sub-Saharan African economy is performing this poorly, and this is what pushed us to the negative or the slow growth of 1.6% we just saw. While these countries are have no direct trading with Rwanda, therefore wouldn't have a direct impact on our economy, except South Africa, where we have some investments coming from there. But in general, it puts Africa in a difficult situation, and therefore those who follow news on developments, on economic development in general, you see that the narrative on Africa has started changing. We've come from about 2 to 3 years ago, we're talking of Africa rising with 1.6% growth last year. The narrative is changing, and now the naysayers or the negative forces outside there that would always want to put Africa in a dark continent have picked this as big news, and therefore this narrative is affecting Africa in general. While we have only 3 countries that are affecting the continental growth, but the narrative has changed, and they're now mobilizing financing globally for African countries becomes a bit more difficult or very expensive. So that has an impact on us as Rwanda, though at the end of the day, we are among the few countries that are expected to grow at above 6 or around 6% in general. So the other graph on the right side of this slide shows the key performing or the good performers in Africa in general, and as you can see, this is mainly concentrated in East Africa. Here we have maybe Cote d'Ivoire that is outside East Africa. So in general, we are part of the bloc is doing well, but it's of course affected by the global or the overall negative picture around the performance of the African economies in general. The graph here shows the prices. As I said, commodity prices started crashing around 2014. What we see towards the 2017, we see again this curve turning, sort of going up. So this gives us confidence that the negative impact we've had in the reduction of the commodity prices will start to ease in 2017, and this concerns all the commodity prices. Of course, our main interest is on the minerals, because as you see later, is a key component of our exports. So as you see the green line showing the performance of minerals, we see positive trend in 2017. In fact, we've already started seeing that at the end of 2016. Something to worry about is on oil. As you see again, oil is expected to slightly pick up in terms of the prices, but it remains below $50 per barrel. So we hope if it doesn't go beyond that, then the impact on us will not be that big. So this graph also shows positive messages to us, though it's a bit mixed. We look at oil and look at our own exports as well, because oil impacts us on our import bill, as you'll see. On inflation, here we mainly focused on ESC as our main trading partners. As you can see, 2016 has had almost all our inflationary numbers, or our inflation numbers, converging at around 5.7. For the first time, Rwanda is the green line is really up together with our sisters in the region, and this was mainly pushed by food, as I'll come back to in the other slides. But I just wanted to show that across the region we've had inflationary pressures, but they're not that big to cause a crisis or a big worry. If it remains around 5.7, we still are doing well. Now, on the national economy, first slide, we just touched on the real economy, as I said, the performance of the economy in general. The first 6 months the economy grew by 6.1%. Here we are trying to compare 2015 and 2016 in different sectors. Agriculture, though here in fact this is the first 9 months, grew by 3.7%. But as you remember, in the last quarter, that's the quarter 3, the last time we had the GDP numbers from statistics, it grew by 1%, and that has had a big impact on the economic performance in general. But as you see, both industry and services continue to perform slightly well, those a bit lower than we saw last year. The other point we look at is, for us at the central bank, we compile frequent economic numbers as we wait for the final numbers from the Institute of Statistics. We normally look at the frequent numbers to indicate the trend the economy is taking. So when we look at least we are now able to have all the numbers for 2016, we see still good performance, though slightly below what we had in 2015. So overall, what we call composite indicator of economic activities, there's slight decline from 13.5 to 10.7%. We still think that is in line with the expected projected performance of the economy from 6.9 in 2015 to 6% this year. And then you see the turnovers both in industry and the services. In industry, this is mainly affected by construction. Again, maybe you see the tables, the details in the booklets. We see construction going down because of the big projects that were being concluded in 2015 toward the beginning of 2016. On exports, this is one of the interesting areas we follow that really impacts on the performance of the economy and our monetary policy and the stability of our currency in general. So we'll have a few slides on this. When you look at the performance, the trade deficit itself, there was improvement. So good performance in the deficit because we had slightly good performance in exports, growing by 7.1%, and imports reducing by 2.7%, that is in value terms. So when you look at the graph here, the green is exports and the yellow is imports. As you see, imports are slightly reducing from 2014. The curve is going down, and exports, we had negative growth in 2015. What is interesting here, I think, let me show you the slide on volume. So the left side is value and the right side is volumes. What's interesting with the imports, when you look at the value we got in 2016 is more or less the same as what we had in 2014. But when you look at the volume, what we had in 2014 is much lower than what we had in 2016. So this is a big impact of the commodity price shock we had 2015, 2016. And of course, this calls to what we've been discussing and what we are trying to do, export diversification. So while there has been concerted efforts to increase our exports, the volumes continue increasing, but the value has gone down because of the issues of commodity prices. So the red line in the first graph on the left shows the reduction in the trade deficit, as I had said, which is good, but we'll see what is contributing to that. This we try to break down the exports into formal, or what we call traditional exports, and re-exports and non-traditional exports. So traditional exports are mainly minerals, tea, and coffee, and that has been the driving or our main export earners. But as you see, that's the green bar. It has been going down since 2013, and I hope I have the volumes here. Yes. So while the value has been going down since 2013, in actual fact, the volumes have remained almost constant of our traditional exports. So again, it comes back to the issue of the prices. But while the traditional exports were performing badly in the last 3 years, the good thing to note here is that re-exports have improved, have maybe filled the gap. So we see more increase in re-exports to the region. I'll come back to that in the next slides. This slide here, the graph plotted here is trying to show you how our export performance is directly linked to the performance of our minerals, our mineral exports. So as you see the two graphs, the dotted graph is total traditional exports, and the dark or the blue graph is the mineral exports. So as mineral they go up, our exports increase. So this has been really the trend we've had. But again, as you see in towards the end, 2014, 2015, as I said, the other traditional exports were performing a bit better. So there's slight difference there, but the trend has been the same. I want to link this to the first slides of the global commodity prices, where we indicated that we expect to see mineral prices going up during the course of 2017. And therefore, that gives us confidence that our traditional export earnings are going to increase in 2017 because it's mainly driven by minerals. This just gives the details of what makes up the traditional exports, as I had just said. As you see I don't know whether that is purple or maroon. That's purple. Thank you. So that is the minerals. So as you see, its performance has really, as I had already explained, has a big impact on the performance of the general traditional exports. This is the minerals now, trying to break down the minerals. And again, as you can see, tin, which is cassiterite, has been the key driver of our minerals, tin and coltan, and these have had the biggest fluctuations or impact on negative impact in terms of prices internationally. So, and that's what we saw in the upward curve in terms of minerals. We see these prices now improving. Now on re-exports, as I said, we've had good performance in re-exports. As you can see, the curve has been going up since 2011. There's been initiatives to increase our exports to the region. And the main driver of this is fuel. Again, as we improved our storage facilities last year, you see, again, this is improving on our capacity to re-export more fuel products. So this is the main driver of our exports, and this is mainly to DRC and Burundi. The other component is machines and vehicles, and then other re-exports, including food stuff. So this has really been doing well, and so as we look at the strategy to improve our exports, this is one area that has proved to be very productive. On imports, as you see, the import curve sort of flattened around 2014 and almost going down in between 2015 and 2016. And this is mainly linked to the reduction in the export bill of the energy products. As I said, this has been positive in our balance of payments. So any uptick in the prices of energy products or petroleum products, of course, will be a concern to us. But as you see, all these are volumes. Let me go to the breakdown. While the exports have slowed down a bit, but the consumer goods, the imports, the consumer goods are still increasing, though not sharply, but they continue to increase. And we've tried to just break this into two categories, food and non-food items in our consumer goods. So this, again, is to show where we can focus. In food, we have sugar here, we have rice, we have different foodstuffs that we can produce locally. So as we talk of made in Rwanda, this is one area we can focus on to improve on our balance of payments. So that's really why I wanted to break this down to the audience. The other intermediate goods, we saw this going down in the last 3 years, and this is mainly linked to, again, the commodity prices. As I said, we see prices of wheat and malt, which are the biggest component in these intermediaries, going down. This is wheat that is not wheat flour, but wheat used by our two factories. So because of the international prices, this has slightly gone down. And we also see imports of construction materials, especially between 15 and 16, we see imports of cement going down because of the increased production of Cimerora. So while this could be a concern in terms of, because intermediate goods are supposed to be increasing production, but the cause of this reduction is not really that negative. So on the policy stance, giving the context of the economy we've been working in, what do we do at the central bank? Again, as I said, we've been operating in a weak external sector environment because of the low commodity prices. We've seen increased demand of hard currency on our markets because of the big projects that we are going on. Then we've had inflationary pressures, especially linked to food. We had bad performance of agriculture last year. As I said, we just had 1% growth in the third quarter. Therefore, we had the food inflation has been really going up. Then we also had pass-through of the exchange rate impact on the prices. We see a slight decline in the banking sector, not negative growth, but slow growth in the banking sector, and this is linked to overall performance of the economy, especially agriculture. Agriculture impacts on the demand, domestic demand of our citizens, and that impacts on different sectors in general. So what you see in terms of the slow performance in different areas is mainly linked to the low performance in agriculture. So in that context, we maintained a prudent monetary policy across the year. We kept our monetary stance unchanged till the end of the year. As we were ending there with the positive developments I said at the beginning, we thought we could slightly reduce on our policy rate to encourage more activity in the banking industry. Again, as you see in the different monetary aggregates, there's been slow growth in those areas. So we wanted to try and put some energy in that to support the economic performance, since the pressures we see on exchange rate, as I will say again, has eased, and we expect to see the pressures on inflation easing as well. I'll come back to that on the next slide. So this gives the trends in the monetary aggregates that I had just said. Again, we tried to plot it from 2011. But what's interesting, when you see 2016, there's been positive growth, but really low compared to what we had in the last 2 years with the money, the growth of money M3 being much lower than what we saw in the last 2 years. The same with credit to the private sector. The new authorized loans, all these slowed down in their performance, and that influenced the decision of the Monetary Policy Committee when we met in December. The slide on this part shows the demand for money. So deposits also didn't grow that well in 2016, growing by 8% compared to high numbers we saw in the last 2 years. Currency in circulation has been going down. That we can be happy about it, because it shows more money is in banks and more modern payment means are being used. On the interest rates, we see these increasing 2015 to 2016, mainly linked to activity on the interbank market. This can be linked because we see more activity on the interbank market. And as the central bank, we appreciate this because this will improve or will help us to or will have a positive impact on our monetary policy transmission. So the money market interest rates slightly increased during the course of 2016. But what we see is, as we have always seen in the last 3 years or so, the lending rate remains more or less static around 17%. Slight reduction here between 2016 and 2015 from 17.3 to 17.29. And deposit rates also slightly reduced from 8.24 to 7.29. So these are discussions we've had. There are different causes of this sort of static interest rates in the lending side. And at least the good thing we see so far, and we don't expect the slight increase in the money market rates to impact negatively on the lending rates. On inflation, as I said, we saw pressures during the course of 2016, increasing from an average of 2.5 in 2015 to 5.7. And this is mainly driven by food. Again, as I said, we've had a big challenge of food production last year. Again, as you can see, the curve from way back 2005, our headline inflation is mainly influenced by food and imported inflation. These two have really had impact on how our inflation performs. And as you see in 2016, we had both impact on imported inflation because of the pass-through of the exchange rates, and then we had big pressures from food inflation. So that impacted on the overall headline inflation. As I said, by the end of the year, we could see this year, again, I'll come back to that in the outlook. So we expect these negative trends in inflationary pressures, both on the imported inflation and food inflation, to ease depending on what we'll see in agriculture. At least the message we got from the meteorological center so far indicates we have no more rains this season. So expect season B of this year to be positive, and that would impact positively on the inflation and economic performance in general. This is on depreciation of the Rwandan franc. As you can see, we've had pressures over the last almost 4 years. Last year was a bit harsh because we had big, as I said, big demand. Demand increased tremendously, and the performance, the gap continued to be really wide. So all that combined had that impact on the imported inflation. So far, again, I'll come back to that in the outlook, we see these pressures have started easing this year. Yeah, now moving on to financial stability. This first slide just gives you a flavor of what we have, what makes up our financial sector. Again, as you see, the banks reduced slightly from 17 to 16 because one bank, BLDC, was merged with BPL. But I think this year we already have another bank we licensed beginning of this year, Commercial Bank of Africa. So we start there with, again, the same number. Insurance companies increased by one. BK Insurance started operations last year. Pensions still have one. We start the process of registering private pension managers. So maybe by the end of the year, we've given ourselves to end of June as the deadline. Maybe by end of this year, we'll have more pension managers to report here. MFIs slightly reduced because some of the MFIs converged into one private MFI. There are many circles that combine and merged into one MFI privately owned. So this is really, again, as you see, the banking industry continues to dominate the sector. So that you have in your booklet, and we normally present it here. So the slide here indicates the general performance of the sector, and we see positive developments across the sector. On the assets of the banks, these were increasing by 11.5%, slightly lower than what we had in 2015. The loans increased by 14.6% from 21.5 last year, and deposits also increased slightly. You might notice slight difference from the numbers we had on the monetary side. We use different components, slightly different, but the picture is the same. And we see the same trend in MFIs, increase in loans, increase in assets, though slightly lower compared to last year, as I had said earlier. Maybe here the negative growth of deposit in the MFIs is mainly linked to the change in how we manage our Mutuelle de Santé. RSSB taking on Mutuelle de Santé, so had to withdraw most of the money that was in the SACCOs for better management. So that impacted on the deposit in the SACCOs negatively. Insurance, we also see good performance. This again, you see in the booklet, while overall picture is very positive. As we have said before, we still have some challenges in the private sector insurance industry, but again, by the end of 2016, we've seen a lot of positive developments there. Most of them have already recapitalized. We've issued regulations that, or directives that will reduce the negative competition we saw in the market and other negative practices. So we hope that will improve greatly, and we are working with the industry to really improve the performance of the private insurance industry in general. So you can look at the numbers later in the booklet. This again shows the measures of the health of the financial sector. The capital adequacy ratio for both, yes, this is the microfinance and the banking industry is very healthy, so they have a strong base to deal with any pressures or any shocks. Where we see slight deterioration is on the non-performing loans. This is mainly linked to the poor performance, as we said, or then slightly reduced good performance across the industry, especially agriculture, impacted heavily on the microfinance institutions. But we also worked with the different financial institutions to clean up their books, and this is reflected in the numbers here. So that slightly impacted on the profitability of the banks. So one was still high operating expenses linked to increased provisions, and also the overall, the biggest bank, BK, was enjoying government reduced taxes because they had listed on the stock exchange in 2011. So they had a tax holiday, sort of just flat tax of 5% till last year. So this last year is when they started paying taxes. So that also impacted on the profitability of the industry in general. With pensions, working with RSSB, we continue to see improvements in pension. Both assets, contributions have been increasing, benefits paid have increased, and total investment income remained more or less constant. So we don't have any big concern with the performance of the Social Security Fund so far. On the payment systems, we indicate here I think the most important thing is on the right side of this slide, where we see the proportion of payments done electronically improving as a percentage of GDP. So by last year, 2016, we had reached 21.6. So the other part is just showing the components of what has been driving this. But I think as I come back to the most important thing is we saw different developments towards the end of last year and the beginning of this year that is supposed to change this completely. Maybe in the next 1 year or two, we expect to see this 21% almost doubling because of the new products we see in this space. Here we try to break down the mobile money operations, which has been the main driver of digital financial services. The biggest we see has been in purchasing of airtime and transfer between persons to persons. But again, on the other side, we are showing what the new developments, especially government, really digitizing most of its payments, and we expect this to continue as Rwanda Online is taking shape. Then micro savings, this is a new product, micro savings and microcredit. Already we see good numbers here, between 15 and 16. But what the developments we saw beginning of this year is expected to have a very, very big impact here. Now on the financial inclusion, access to finance, here we look at we try to see the improvements in number of people that access financial services. Of course, we based on the last FinScope we had in 2016, where we saw formal financial inclusion at 68%. And we try to look at how people accessing or improving on working with financial institutions. While the banking agents have been increasing across the country, in fact, from 3.2 to 4.4 thousand, it hasn't had a big impact on the bank accounts for individuals, as we see from this number growing from 2.3 million, 2.35 to 2.36 million. So the bankers here, this slide is supposed to be a challenge to you. Where we had good improvement in microfinance institutions, more people opening accounts with microfinance institutions, but we still see slow uptake from the banking industry. I know the new products, as we are saying, you can now open your account using a phone with some banks, so maybe that is going to improve greatly with on the number of accounts in the banking industry. So we see maybe the banks increasing their outreach to the population, and the use of these banking agents to be able to open bank accounts for the clients. That will also have a good impact on the people working with the bank. So this is just a follow-up and a challenge to us all to continue working with the population to mobilize them to work with financial institutions. So as I conclude, briefly on the outlook, I've mentioned most of these. We expect to see improved performance of the currency. So the depreciation in 2017 is likely to ease. We didn't put here numbers. We are still working on the actual projections, but with what we've seen already in the first 2 months, it's not yet even half. I think it's just like a quarter of what we had last year. These are some of the contributors to that. As I've already said, the expected recovery in commodity prices, increased domestic production. As already mentioned, we expect to see Similar increasing their production. I think what we had last year was around 290,000 tons, and we know their capacity is 600,000 tons, so expect them to continue improving on their production, and that will have a big impact on reduced importation of cement. Outstanding credit to the private sector, we expect this to improve at least to around 16.3% during this year. With the financial sector, we expect to move to slightly improved financial stability measures or requirements of Basel II and Basel III. We've been working with the banks to move towards this, so by the end of 2017 we should be implementing this. And the insurance sector, as I had already said, we expect this to improve primarily based on the recapitalization already done and the different measures we put in place and the partnership we are putting in place with the ASAL, the Association of Insurance Companies, to try and remove all the negative practices in the industry. We've just established a deposit guarantee fund, so at least we see this start working this year. So going forward, if there's any problem of any financial failure, we don't have to run to the treasury. We should be able to use this fund to refund at least the smallest depositors across the financial institutions. And the process that has been going on of automation and consolidation of Mrenje Sacco, we expect this to be completed by the end of this year. On the digital financial services, I think I kept on saying on new products coming on in the market. I think here we are listing products that we expect, or services that we expect to have positive impact on the payment services, or going digital, as we've been saying, reducing the cash transactions. As you see on the slide, there are different initiatives that have really been launched by different operators in the market, and we know there are other products in the pipeline that will really improve on the payment systems. Thank you for your kind attention.